In the previous class, I told you about this when separate set of books are maintained in joint venture. Now, when separate set of books are not maintained in joint venture, for that I'm going to explain that. When the organization is small and when the co-venturers, when they are staying at far away places, it is not possible to keep separate set of books. In that case, there are two possibilities or there are two methods. What are the methods? When record is maintained in one of the parties' books, when each co-venturer, when he records the transactions of joint venture. These are the two possibilities that we come across when separate set of books are not maintained. Okay. When we go for record, when record is maintained in one of the parties' books, that is, I'll give you an example for this. Suppose two persons A and B are co-venturers. Okay, A can maintain the books or B can maintain the books, whomever it may be. Suppose take for example A is maintaining the books. Then whatever it may be the amount that was contributed by B, we will take. For that the general entries are for receipt of cash from B as a share of investment, cash account data to B's account. For the purchase of goods by A, when A is purchasing, joint venture account data to cash account. For the supply of goods by A from his stock, joint venture account data to purchases account. These things I am telling in the book when we are keeping in the books of A. When for the supply of goods by B, joint venture account data to B's account. For the expenses incurred by A, joint venture account data to cash account. For the expenses incurred by B, joint venture account data to B's account. For sale of goods by A, cash account data to joint venture account. For the unsold stock taken over by A, purchases account data to joint venture account. Okay, next, for commission due to A, because A had done the sales, so he is entitled to take commission. Joint venture account data to commission account. This will appear in the books of A. For the interest payable to B, because he is investing, so it is our responsibility to pay some interest to B. Joint venture account data to B's account. For the profit on joint venture, when it got the profit amount, joint venture account data to profit and loss account, that is A share of profit, to B's account, that is B share of profit. Suppose if there is loss, the above entry is reversed. That is profit and loss account data, that is A share of loss, B's account data, that is B share of loss to joint venture account. And for the final payment made to B, B's account data to cash account. In the same way, when B is maintaining the books, okay, A, we have to take into account A. Okay, we have to take into account A. Next, when each co-venturer records transactions affecting joint venture account. Under this method, we have to prepare memorandum joint venture method. This is also known as memorandum joint venture method. Okay, it is a alternative method of third method discussed above. Okay, under this, what are the general entries that we come across? For goods supplied by A, joint venture account with B to purchase account. For the amount spent by A towards joint venture with B account data to cash account. For bill drawn by A on B as advance, bills receivable account data to joint venture account. For charging the discount of the bill discounted by A, joint venture account with B account data to discount account. For sales made or amount received by A, cash account data to joint venture with B account. For commission due to A, joint venture with B account data to commission account. for the share of profit of A joint venture account with B account data to profit and loss account. So these are the entries that we come across when separate set of books are not maintained. So according to this journal entries, we have to prepare the ledger accounts. According to this, we have to prepare the ledger accounts. In the books of A, joint venture account we have to prepare, and other co-ventures account we have to prepare. That is B's account we have to prepare. In the books of B, same joint venture account we have to prepare, as well as A's account we have to prepare. Now, alternative method, memorandum joint venture account. In this, we have to take into account both the parties, whether they supplied goods, whether they purchased goods, whether they incurred the goods, whether they are making the sales, whether they are getting the commission, whether interest payable, everything we have to take. And in the books of A, joint venture with B's account, and in the books of B, joint venture with A's account. That is, we have to take in the joint in the previous thing, that is in the books of A, joint venture with B, only B's transactions only we have to take into account. When you go for in the books of B, we have to take into account the transactions of A. This is how we will come across the joint venture. So joint venture is nothing but a nameless partnership business. Okay, the partner, the co-venturers, they'll come together, they'll undertake a work, and after completion of the work, they will disperse. They will take their amounts and they will disperse. This is how you will come across joint venture. And you may think that, sir, this is very confusing. Is there any alternative for this? There is no alternative for this. And most of the cases, in most of the cases, you will come across when separate set of books are maintained. And in very, very rare cases, you will come across when one party, when he records their transactions, or when both the parties, for example, just now I had given an example, A, B. Okay, in the books of A, in the books of B. Okay, when you go for third method, one thing you have to keep in mind is, first of all, you have to prepare memorandum joint venture account. Okay, taking into account both the persons. Okay, what are the purchases that are made by A? What are the expenses that are met by B? What are the purchases? What are the goods supplied by B? What are the expenses incurred by B? And what is the commission? Who is the seller? Who is selling the things? And what commission he is going to get? What interest payable is to be given to the other co-venturers? Everything we have to take into account. Everything. But compulsory we have to prepare memorandum joint venture account. And in most of the cases, you will come across when separate set of books are maintained. That is, when you go for separate set of books, okay, one thing is you have to keep is, we have to prepare joint bank account, joint venture account, and individual accounts of co-venturers. That is, 3 accounts you have to prepare. And these 3 accounts, okay, joint bank, joint venture, and personal accounts of co-venturers, it will be in this order. But thing is, when you are preparing, first of all, you have to prepare joint venture account. Then you have to prepare, okay, individual accounts of co-venturers. And last is nothing but joint bank account. Don't go for preparation of joint bank account in the beginning. It is the last thing that we have to prepare. Because in joint bank account we will come to know what is the amount that is left over, and in what way we have to distribute to the co-venturers, because the co-venturers, they have to take their money back. So like this we will come across. And when you go for joint bank account, one thing you have to keep observe is, both the receipt side as well as payment side, that is debit side and credit side, they must tally. Suppose if it won't tally, somewhere you have done a mistake. That is compulsory. So joint bank account, it will tally compulsory. The receipt side will be equivalent to the payment side, or the payments will be equivalent to the receipt side. This is compulsory. But the mode of preparation is joint venture account should be prepared first, then personal accounts of co-venturers must be prepared, then at last you have to prepare the joint bank account. And when you go for the other things, that is when separate set of books are not maintained, you have to see who is preparing the books, who is preparing, which party is preparing. For example, A and B, whether A is preparing the books or B is preparing the books. So when A is preparing, okay, as usual, what are the purchases made by him, what are the expenses incurred by him, what are the purchases, what are the goods supplied by the other co-venturers, everything we have to note down. Everything we have to note down. Then we have to prepare joint venture account and the other co-venturers account. It is not the person's co-venturers account who is preparing the books. The other co-venturers account you have to prepare. And when you go for the third method, that is memorandum joint venture account. First of all, you have to prepare memorandum joint venture account, and then in the books of one co-venturers you have to prepare the account of other co-venturers, and in the books of other co-venturers you have to prepare the accounts of the co-venturers, first co-venturer. Okay, this is how you will come across the joint venture. And don't get yourself confused. Don't, what I am telling you is don't get yourself confused. Read the problem 1 to 2 times or 3 times, then you can able to understand whether we have to go for separate set of books or when we are going to take into account the other thing. Okay, after reading the problem only you can able to understand. Then it will be very easy for you to pass journal entries as well as ledger accounts. In some problems, you will be asked to prepare the ledger accounts only. But thing is, okay, first of all, prepare the journal entries. It is the easiest way for preparation of ledger accounts. Directly, when you are thorough with this, when you are very thorough with this, then only you can go and directly prepare the ledger accounts. But my sincere advice is it is better to pass journal entries first. Thereby, it will be easy and it is understandable to you to to you to which account we have to prepare. Okay, so with this, I am closing this joint venture account, and the next topic I am going to take as single entry, that is accounts of incomplete records. When you go for the first stage, we'll have two types of systems: double entry system and single entry system. Okay, what is the difference, main difference, without going okay into actual systems? What is the difference, sir? The difference is double entry system will have permanent existence. The people who want to follow the double entry system will have permanent address, permanent existence, okay, wherever he stays. But when he is business in a particular place, he has to come from his place to the business place. So permanent existence will be there, and for those people only double entry system is possible, and those people only they will follow double entry system. And single entry system, for small vendors, for small businessmen, when they want to know profit as early as possible, then single entry system should be followed. It is compulsory. It is compulsory because the street vendors and the fruit merchants or the vegetable merchants, what they want to do is who are doing the business in very small scale, okay, like cycle shops, pawn shops, all these people, they want to know the profit amount as early as possible, as quickly as possible. So those people, they cannot maintain the different types of books. So those people only they will prepare, they will follow this single entry system in order to know the profit amount as early as possible. So the next topic I'm going to deal tomorrow is single entry or accounts of incomplete records. Okay, or we can say that it is nothing but defective double entry system. It is defective double entry system, because in double entry system we have to prepare so many books, we have to prepare so many books, we have to prepare so many accounts. But in single entry system it is not like that. Okay, it is not like that. Here also there are two methods. See the peculiarity. In single entry system also there are two methods. Okay, capital comparison method and conversion of single entry into double entry. So both the things I am going to discuss tomorrow. So if you like, please subscribe to my channel, and thank you all.